somebody that's tapping in. Allow me to type this out on IG and pin this comment. And then we'll get right to it. I'm not going to hold you very long today. Not going to hold you very long today at all. Let me share the screen of screens with you, and we're going to get right into it. Today, I want to talk about a very serious topic. Very, very serious topic. And I say it's a very serious topic, especially for the gang. This is straight to the gang, right? If you look at my screen over here, if you're on IG, pull up on YouTube so you can see the screen. If you look at the screen, the topic of discussion is, will ICT concepts make you a profitable trader? And the long and short of it is absolutely, unequivocally, no. It is a no. The ICT concepts will not make you a profitable trader. The ICT concepts is just that. They are concepts. The problem I have with the ICT community in large, and it's not just the ICT community, it's every freaking community dealing with trading. It's uber, super duper, spendacular, toxic, filled with trolls upon trolls upon trolls. And why is that? Because it resides on Al Gore's internet. Anything that resides on Al Gore's internet, with the exception of the Spider Gang, has toxic tendencies. Right? Me, my sweetie back here, over there, my best friend over here, come here, coochie, coochie, coo, coochie, cookie, coochie, coo. We are the only non-toxic people on Al Gore's internet. Welcome to the Spider Gang. Now, seriously, ICT concepts will not make you a profitable trader. It won't do that. Now, are the ICT concepts the most accurate thing that Lil Timmy Rogers has ever seen in his life? Why am I lagging? Do y'all hear me? Did y'all miss anything that I said? I was like lagging really bad. Think the feds are listening, right? Let me say it again. Are the ICT concepts the most accurate thing that Lil Timmy Rogers has ever seen in his life? Yes, they are. Extremely accurate. Now, here's a little pro tip from me to you. This is for the gang. This for the tried and true members, the ones that be pulling up daily. You know what I'm saying? This for the here to learn and shares. This for the Heinzes. This for the Debras. This for the E-Rocks. This for the Lil Hawks. This for the Mendezes. This for the Felicias. This for the my best buddy. Coochie, coochie, coo. Come here. Don't run. Come here. Don't run. Come here. Come. I poke your eye. Coochie, coochie, coo. This is for everybody. If I didn't call your name, I jalapies. Right? Rhonda. This for the Rondas. This for the Michelle Tuckers. This is for you. This is for, when I said that, it made me think about, rest in peace, DJ Casper. When I said that, I sound like DJ Casper in my mind, like I was getting ready to start the cha-cha slide. Rest in peace, DJ Casper. Now, this is for you. So, this is the pro tip. Unless you're like Lil Timmy Rogers, right? How is Lil Timmy Rogers? Lil Timmy Rogers likes to pick apart every little thing. I used to open up. My mama would buy a brand new sound system with speakers about this tall when I was little, and I would open it up, and she'd be like, "Boy, stop opening up my stuff." I had to see how everything worked. So unless you're like me, don't try to learn all the ICT concepts. It's going, it's going to hurt you. You're going to get into the you know, when you know what they call it, diminishing returns, the law of large averages or whatever. You know what I'm saying? What is this in my screen? Get out of my screen. Light, right? It's going to start to like weigh you down. That's why I remember I posted something. I posted something and it was like, try Jesus, right? And I was like, if anybody asks me about this concept, I will shut the whole thing down, right? And the reason why I say that is you already have more than enough to be successful, right? This is the tip. I'm getting to the tip. Figure out of the ICT concepts that what works best for you. Michael says this time and time again. He tells people time and time again, don't try to use all of my concepts. Figure out what works best for you and only do that. If you trade breakers, don't be looking for fair value gaps, mitigation blocks. Don't look for nothing but breakers. Your understand time, price, bias, draw. It matters not what PD array you choose to enter on. If you don't understand time, price, bias, and draw, if you don't know where the market is trying to go, you are just gambling. It don't matter what PD array you, it's not the fact that the breakers aren't working for you. It's not the fact that the fair value gap is not working for you. It's not the fact that the turtle soup is not working for you. It's because you don't know where price is trying to get to. So if you don't know where price is trying to get to, you don't know when you should try to get in. Do you understand? Do you understand? Do you understand? Where your screen? Move, handsome guy. If you do not understand that price is trying to get above this line right here, you don't know when to get in or why to get in. You're going to get caught up in every little up and down move, right? Every little up and down move, right? And if price does not get up there, you can still make money, right? Did I anticipate price going up there? Yes, I did. Yes, I did. How can you tell that I anticipated price going up there? Because those of you who know how I mark up my chart, you can kind of look at my chart to see what my bias is, right? You can see what my bias is, right? How can you tell that this is where I anticipated price to go? By the way, I marked up my chart. I got a consequent encroachment of a daily wick in the discount marked out. If price decides it wants to drop down there and I think it's going up here, I'll be looking for a reason to buy something on a reversal down here, right? I have these 15-minute fair value gaps that's grayed out. That means we have traded to them before. So when we get above them, I'm anticipating them to act as support for price. Support for price. I'm anticipating these to be support for price, right? I got the weekly equilibrium right there, right? We're getting above it. We're moving up now. I got the higher time frame equilibrium right there. Boom, we're getting above it. We're moving up, right? So I'll know where price is in relation to everything moving toward this draw. And then I have this SIBI above price. Right there. Right? This right here is a daily fair value gap below price. But with everything I got marked on my chart, I got this gray weekly grade. I'm anticipating it to act as support the price. When we reprice, when we redeliver the sell side, buy side, whatever we need inside, like this is a bullish fair value gap. Once we redeliver the sell side, right? What do we anticipate price to do? Come back down, at least to the bottom. It don't have to get to the bottom, but we expect price to come back down and then leave the area. What did price do? Came down to the exact bottom on what? The news candle. Right here. The exact bottom. What did it do before coming to the bottom? It went up here and took out all of the, just ran these stops here. Then it came back down, ran these stops here, and stopped dead on the point of the bottom of the weekly fair value gap that we anticipate to support price. Right? Before we got into CPI, what do we say about CPI all the time? The market will make a move and then slide to the right. Slide to the right. Crisscross. Shout out, rest in peace, DJ Casper. And that's what we say. The price will make a move, then slide to the right. What did it do? Made a move and slid to the right. Right? Where did it slide to the right in? Inside a weekly PD array. Came to this weekly PD array, slid to the right. Right there. We made it over here. We offered the sell side. Then we consolidated. Waiting for what? The CPI numbers. We consolidated here from, we got here Friday, then Monday, Tuesday, Wednesday. We just consolidated in this area right here. Right? Right? Now, me being little Timmy Rogers, right? I like to understand every aspect of everything that I do. But do you need to know anything other than one thing? Nope. To be successful? Nope. I didn't talk about breakers. I didn't talk about mitigation blocks. I didn't talk about order blocks. I didn't talk. All I talked about was fair value gaps and the equilibrium of the dealing range. That's not even important right now. I just got that marked on there. But I just talked about fair value gaps. Well, Tim, you said consequent crushing of wicks are treated as gaps. Only thing I'm talking about is imbalances. That's all I was talking about, imbalances. One thing. Why? Because that's my thing. Price seeks liquidity and balance. That's it. So if price is running after liquidity and balance, all I want to know is where is the liquidity and where are the imbalances? That's all I want to know. But I internalize all the other concepts because I need that because of my personality. But I don't use it every day. I don't use it for every trade. If I see somebody successful with an order block trade, I don't say, hey, let me go incorporate order blocks. You're just hurting yourself when you do that. You're hurting yourself when you do that. When ICT talks about his different PD arrays, whatever PD array you see the easiest, focus on that. Focus on that. Once you build your model, only trade that. Only trade that. Backtest your model to see the effective rate. Sim trade your model to see if the effective rate is the same in current market conditions. Once you sim trade and get comfortable with your model, then start out trading the micros to get your feet wet using real money. Once you get comfortable trading the micros with real money, then it's fine to move up to the minis. But only trade your model. And the reason why I say this is because I have people asking me about different PD arrays. And when I say, what's your model? They either say, I don't have one yet, or it's a model that don't even include the PD array they're asking me about. You're hurting yourself. You don't need to know more. The concepts don't make you profitable. The concepts don't make you consistent. Your model and sticking to your model without deviation is what makes you consistent. Sticking to your risk management without deviation is what makes you profitable. Your model makes you consistent. Your risk management makes you profitable. The ICT concepts, if applied correctly, can make you consistent. Your risk management will make you profitable. It's 9:57. I yield my time. And by the way, we went above that line. That's what they call a draw on liquidity. That's what they call a draw on liquidity. Now, look at this. That's a beautiful. I was gonna share something else, but I don't feel like it. It's time for me to start watching the charts. Let me see what's in the chat, and then I'm gonna go. Here to learn to share. Good morning. Good morning. Rhonda. Good morning. Good morning. Concepts alone. No. What's up, Laverne? Quick drop in. Good morning. Good morning, Angela. What's up, Seawalk? What's up, Robinson? What's up, Rhonda? Hard-headed. Real talk. I only use FA guys. My son says my ICT because DR. That's it. 90% of the time. That's what's up. What's up, Marco? Long time no see. All right. That's all I got, man. I appreciate y'all for hanging out with me. I just wanted to share that real quick. This is a short one. Remember, if you apply the concepts properly, you can become consistent. Risk management, proper risk management is the only thing that will make you profitable. Without proper risk management, you will never be profitable. Study long, study wrong. That's all I got, man. Appreciate y'all for hanging out with me. What's up, Kim? I'm about to go. If you just got here, Kim, run it back. If you're going to trade, please trade safe. If you're not going to trade, please take copious amounts of notes so you can go back and study what you saw today. And with that, Big Spider, gone.